PPP forgiveness, cannabis, mergers and acquisitions. What does the banking community think of these pressing issues? This is the IssuesWatch podcast. Hi, I'm Don Meyer, Chief Marketing Officer at the New Jersey Society of CPAs, and welcome to the IssuesWatch podcast. The pandemic has changed people and businesses in significant ways. In previous episodes, we've discussed the pandemic's impact on real estate, technology implementation, and the CPA pipeline. In today's episode, we're going to talk about the pandemic's impact on the ABCs of business resources, specifically the B. And for those of you who don't know what I'm talking about, ABC stands for attorneys, bankers, and of course, CPAs. Bankers and CPAs serve as valuable resources to each other. And like CPAs, bankers learned a lot about themselves and their customers during the pandemic. Banks pivoted toward remote working, lobby shutdowns, video conferencing, and new security challenges while funneling billions in PPP loans to customers. The pandemic tested their processes, but also created an opportunity to learn more about their customers. Here with us to discuss the current state of banks, bankers, and the banking industry are John McWeeney, the president and CEO of the New Jersey Bankers Association, also known as NJBankers, and Mike Affuso, their executive vice president and director of government relations. Welcome, John and Mike.
Don, thanks for having us. Pleasure to be here.
Thank you so much, Don. It's really great to be with such a august group, and you guys are very well represented in Trenton. Your leadership should be very pleased with the effectiveness of your folks down there.
Oh, thank you. I appreciate it. I don't think we've ever had such a nice response when I welcomed other guests that we've had. So thank you very much, Mike. Appreciate that. So John, first question is for you. We've been dealing with the pandemic for almost 2 years now. Hopefully we've all learned something during this period of time. What have banking leaders discovered about themselves and their staffs during the pandemic?
Yeah, when I think about this, I think it's not so much what they discovered, but kind of reaffirmed about themselves. And the first thing that comes to mind for me is their resiliency. You know, bankers have been through many crises over the years, the financial crisis, Superstorm Sandy, and before that, many other crises. And they always find a way to persevere through these crises. And certainly during the pandemic, the COVID pandemic, you know, the banking leaders and their staff stepped up in a big way to persevere through this and serve their customers and their communities. So I'd say that comes to mind first. Banks have done a lot of work in the risk management planning area, you know, certainly disaster planning. I don't know that they anticipated that this was going to be the type of scenario that they would employ that planning into, but it worked. The risk management planning that they've done, the disaster planning they've done has worked very well, especially as it relates to the ability of their employees to work from home and to work remotely. So that's something they've learned. Again, reaffirmed how incredibly committed our bankers are to serving their customers and their communities. You know, I don't like to use the word pivot because it's so overused, but literally they had to pivot, you know, at a moment's notice and how we're going to serve our customers. And whether it was by banking by appointment or utilizing drive-up facilities to serve their customers. I think we'll talk in a few minutes about digital banking, which was really the great solution, but they really stepped up in a big way and were able to serve their customers. You know, a great example of that is the whole PPP program. I mean, just the commitment that our bankers made to be available 24/7 to serve their customers in the communities. In addition to serving their customers and communities, just the generosity of our bankers has come through loud and clear again. They're always at the top of the list of philanthropy in terms of donations and things of that sort, donating their employees' time and service, but they stepped up in a major way during the pandemic to do that. And of course, the last thing that this proved to all of our bankers and to customers alike is how important digital banking is. All the investments they made and the plans they made for digital banking paid off big time.
Yeah, that was going to be my next question, because recently I read a survey from a large Boston-based bank in which customers and businesses said the pandemic has permanently changed how they interact with financial institution. and I guess it was the businesses part of it that kind of was most surprising to me. Like you mentioned digital banking. I'm sure a lot of customers are doing a lot more than that, but I was surprised that businesses also indicating that how they interact with their financial institutions is also changing. So, John, what have banks discovered about their customers, both on the individual as well as the business side?
Well, again, I'll just say one thing it certainly did was reaffirm the important role that banks play in the financial lives of their customers, whether they're businesses or consumers. You know, we all recognize and pay tribute to the healthcare workers for the great job they've done through the pandemic, and the frontline responders, the people in the supermarkets, the truck drivers and the like that provided services to people. The bankers were on that front line too. They were on the economic front line of the pandemic. And really, without the services that the bankers could provide, people would not have had access to their monies and obviously would have created serious problems for them. But I'll go back to digital. You know, I've heard and I've read that many people think that the pandemic accelerated the adoption of digital banking by as much as 3 to 5 years. I saw some recent surveys that the American Bankers Association did. Before the pandemic, when you would ask customers what was their preferred way of doing business, 33% said mobile. Now, I shouldn't say after the pandemic because we're not done with it yet, but hopefully we're getting close to the end. That number's up to 44%. Before the pandemic, 21% of bank customers would say their preferred way of doing business was the branch. That's dropped to 10%. So clearly there's been a real divergence between people going into the branch and utilizing digital banking. Some other recent stats, last month alone, 3 in 4 Americans reported that they used a mobile device to conduct their banking, which is pretty incredible. And then also in a recent survey, 99% of bank customers said that the digital banking services provided by their bank were either excellent or good. So really the switch to digital, I think, is the big change. And while I'm quoting more consumer type statistics, I think that holds true as well for business customers, you know, whether it be through remote deposit or other digital tools that banks have invested in. That's been a big change for business customers as well.
That's great. Great. Mike, let's get you involved. John had talked a little bit about PPP. What's the latest on PPP forgiveness, and how are banks helping businesses work through that process? Because I know it's not an easy process to get through.
Sure. Right now, according to the SBA, I could give you national numbers, not New Jersey numbers.
That's fine.
There have been approximately 11 million loans have been made. And of the 11 million, 9.4 million applications for forgiveness, and 9.2 million have had payments and forgiveness granted. So, you know, we're about 85% of the way through those numbers. And as far as dollars go, it's 790 billion in gross loans and about 680 in applications for forgiveness, and 668 billion granted. So, you know, we're a long way through the process, but there are issues. As forgiveness begins to wind down, you're going to really get the folks that are laggards, and they might be laggards for reasons that the government is taking a more of a close look at whether forgiveness should be granted. You've probably read about crackdowns on misuse of funds and clawbacks of those funds and prosecutions. So, you know, as this really finishes out, I think, you know, in my opinion, there will always be a laggard 5% that'll take probably a year to really resolve, where the government's taking a really close look at who they are. But, you know, when you just think about the numbers, the fact that we're pretty much 85% of the way there, you know, it's almost done. And I know it hasn't been without its glitches, but, you know, as far as getting, you know, $790 billion out on the street, I think our banks, you know, in New Jersey and nationally have done a very admirable job in helping their customers, as well as people who are not their customers.
Right. And like you said, it certainly had some issues. You know, we've all seen stories about businesses that got loans that shouldn't have, or misuse or something. And if you look at the big picture, accomplished what it was intended to do, right? It got money out on the street, it got it out quickly, and it did what it. We criticize a lot of government programs, but this one seemed to do what it was supposed to do.
Certainly, it definitely did. We'll see. There's 100 billion, at least 130 billion left to be granted of forgiveness. We'll see how much of that is actually granted. And when you flip your hat, your hat, and you say you're going to be a taxpayer, you certainly want the government taking a look and making sure that folks that are eligible are actually the ones that are granted this relief. We have these fights, seems like every year, about fiscal cliffs and budgetary issues. And if the government can claw back, $100 billion through, folks that applied and were granted something they shouldn't have been granted, I think, that certainly is a good thing.
Okay. Now, John, aside from PPP loans, how has the pandemic impacted lending overall?
Well, when you think about the whole process with COVID, the first stage after it hit was the banks were very actively involved in doing loan deferrals. So for both commercial customers and residential borrowers, they deferred millions and millions of dollars of loans. Initially 90 days, for some customers extended to 180 days. What we hear now from our bankers is, thankfully, almost all of those deferrals are gone. People are back on a normal payment schedule. So that went very well. The next phase obviously was PPP. We've talked about, what an effort that was, and boy, that kind of dominated the scene there for a number of months. After we got through the PPP phase and talking to our bankers, the loan demand on the real estate side seems to be pretty strong. We're seeing very strong demand for warehouse loans, retail space, multifamily, rental units has been very strong. There's some areas of real estate that are a little bit soft, obviously office space and hospitality. But since they got through that PPP phase, our bankers are telling us that on the real estate side, loan demand has been pretty strong and pretty consistent. Not so much on the C&I side, lines of credit and borrowing for equipment purchases, things like that. It seems like a lot of the companies, businesses have a lot of liquidity on their balance sheet, so they don't need to borrow, or perhaps initially at least they were a little cautious about borrowing. So we're not seeing as big a demand on the C&I side as we are on the commercial real estate side. Residential real estate lending continues to be pretty solid. You see what's going on in the real estate market here in New Jersey and really across the country. It's crazy what's going on with values. So I'm hearing that, as rates creep up a little bit, the refinance side of the real estate lending is slowed down a little, but purchase money mortgages is still very big as people, are building new homes. So all in all, what we're hearing anecdotally from our bankers, and it's borne out by some of the statistics we follow, is that loan demand has been pretty strong since September of 20 to September of 21 for New Jersey headquartered banks. Real estate lending was up by $4 billion. So that's a pretty healthy number.
We did a podcast a couple of months ago about real estate in New Jersey, and the speaker we had talked a lot about warehouse space and just New Jersey being such an incredibly hot market for that particular element of the real estate market. It doesn't look like it's going to slow down anytime soon.
Yeah, and we think of warehouse, you think of Amazons of the world that are dominating the big warehouse facilities, but hearing from our bankers that even the smaller warehouse providers are kind of getting bumped out by the big guys, so they're seeking space. So even on the small side of the market, it's pretty hot.
So Mike, let's talk about an issue in New Jersey that seems like we've been talking about it for years, and maybe we're finally going to kind of see the end of this, and that's adult use cannabis. The marketplace is supposed to take shape at some point this year. So what is New Jersey's banking industry doing to prepare for this?
Well, we are certainly preparing for business, but it's really up to each and every bank to evaluate their own risk appetite. You have different types of institutions that do different types of lending. You could have a situation where a cannabis or a cannabis related business is walking into primarily a home lender. A traditional thrift lender that really just does purchase money mortgages. So, that institution may have a little bit of a different risk appetite than a traditional commercial bank. So, each is evaluating their risk appetite. And I think, it's important to realize that while it's legal in New Jersey, it is still illegal in the United States. And this illegality at the federal level does cause concern and, forces banks to do a level of enhanced due diligence for this particular industry that they would not necessarily have to do for other industries. But that said, some banks already have relationships. Some of those relationships date back to, the early medicinal marijuana days. But I also think you have to look at the type of relationship, where a depository relationship is different than a lending relationship. Depository, quite frankly, is just money in, money out. The lending relationship requires some other elements. You have to look at, how that collateral is insured, and are you able to get insurance for that collateral? How do you deal with title insurance and liability insurance? Because a lot of insurance contracts have waivers for illegal activity. So, you have to get some level of security around the insurance piece. And, again, it is still illegal. So you could have a situation where your collateral could be seized because it's still illegal if the collateral is the product. There's also concerns around anti-money laundering issues as well as bank secrecy issues. There's talk of the use of cryptocurrency ATMs at marijuana sites. So you would go in with your cash, you'd place your cash in the crypto ATM, you'd get a Bitcoin or some type of cryptocurrency, and you'd use that to purchase your cannabis. Okay, that's fine. But what happens when somebody is using that ATM machine to conduct real nefarious business? They're just coming with their cash, placing it into that ATM machine. Now, that ATM machine owner is going to take that cash somewhere to some bank and wish to make a deposit. And you have to look at what's involved in that process as far as money laundering and bank secrecy issues. So, we're learning as we go. I can tell you that there certainly are banks. If folks are listening and have clients, there certainly are banks that are participating in this business. But it is certainly a question of evaluating your risk appetite. And, I think everybody's going to learn as they go along.
Is it helpful that New Jersey is not first, and far from first, that banks in New Jersey can look to banks in Massachusetts or Colorado or Washington and maybe either learn from their successes or learn from their mistakes?
I think it's helpful, obviously, to have some other templates. There is some idea of strength in numbers, but I think it's more helpful if we had actual leadership at the federal level on this issue to pass a bill like the Safe Banking Act to clean this area up. I mean, you have a situation now where there's a group of senators holding up this bill because they want to legalize marijuana at the federal level, where, this is really just a modest step to ensure that where cannabis is legal, that it's able to be banked. So, the real way is to do it the right way. And the right way is to create a federal solution, because once there's a federal solution, it lowers all of these risk thresholds, particularly on the lending side.
Right. No, that's a great point. Yeah, it's a lot more challenging when you have sort of this mishmash of different rules across the country. A federal solution would be very helpful. John, back to you, but sticking in New Jersey. So just based on the first month of the year, it looks like the accounting profession is going to have a busy 12 months of mergers and acquisitions. How is the overall M&A market looking in New Jersey?
Well, it's very strong in New Jersey. I'll just share some stats with you. In just the last 3 years, we have 16 fewer New Jersey headquartered banks because of M&A. We've been averaging roughly, 5 or 6 M&A transactions per year. that affect New Jersey headquartered banks. So we're down now in New Jersey to approximately 60 New Jersey headquartered banks. That doesn't count the out-of-state banks that do business in the state. But even there, we've seen a pretty significant decline as they get involved in M&A as well. So, and that doesn't count the 6 or 7 announced transactions that haven't closed yet that'll affect those numbers even more so. The good news is, even though there are fewer banks, there are still plenty of banks. It's still a very competitive industry, and when you look at other providers, very competitive space. So from a customer perspective, whether you're a business or you're a consumer, you have lots of options, and the banks that are remaining are bigger, they're stronger, they're bringing a much broader slate of products and services and solutions to their customers. But it's a strong M&A market. I think what's driving it, there's a number of factors. One is the need to achieve scale. You need to have scale if you're going to make the investments in technology and innovation that customers demand nowadays. They're just coming through this pandemic. They've seen what digital banking and innovation can do. They want more of that. That requires investments. It takes scale to comply with the regulatory burden. Mike mentioned BSA and anti-money laundering. That's a big regulatory space in the banking industry. The banks have to hire specialists in those areas to make sure they're compliant, and that can get expensive. So scale is one of the reasons. Some cases, there's a lack of maybe management succession at the C-suite level, where it might be a smaller institution. They don't have somebody queued up to take over for the retiring CEO, or it could be at the board of directors level where there's a lack of succession there. And then at the bottom line, at the end of the day, is you got to maximize shareholder value. That's their principal accountability and responsibility to their shareholders. And sometimes the best way to do that is to merge with another institution. So that's a long-winded answer, but the M&A market is strong, and I think it's going to stay strong for the near future.
Yeah, and your response could have just as easily applied to the accounting profession as well. Because as you were talking about the reasons behind the M&A activity, I was thinking the same thing about the accounting profession. The other one, the big one in accounting, is especially with the competition for staff. In a lot of cases, a firm can't find the expertise they need by hiring it, so they have to go out and find it somewhere else. And typically, that's with another firm, and that's where the merger or acquisition comes in.
Yeah, there's a lot of similarities between the different industries that's driving this.
Yeah. Well, that about wraps it up. But before we go, I'd like to take this opportunity to congratulate you, John, on your upcoming retirement. You got any big plans?
No big plans yet. I live down the shore, and I'm going to retire at the end of June. So just enjoy the summer at the Jersey Shore. What's better than that?
Yeah, well, that's good. That's good for you. We should all
thank you for the
aspire.
kind words, Don. I appreciate it.
You're welcome. Well, your contributions to New Jersey's banking and business community will definitely leave a lasting impact. So thank you for everything that we've done over the years, and wish you well in your retirement.
Thanks so much.
All right. And thank you for joining us today, John and Mike. Really appreciate your time. Great information.
Thank you. Our pleasure.
Thank you all for listening and watching. You can learn more about NJBankers at njbankers.com and on Twitter at NJBankers. And in case you missed it, certain episodes of the IssuesWatch podcast now qualify for nano CPE credit. Each episode is 0.2 credits. And you can also purchase a 5-pack of the A&A episodes for 1 CPA credit. Learn more at njcpa.org/nano.